Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for September 8th, the night of the harvest moon, right? 12:08 a.m. That's what they say. So that must have passed then. If 12:08 a.m. that was last night. So I'm losing track here. Anyway, it's September 8th, Monday, 2014. It's been a long and a bit of a tiring day. So try to keep this video cast right, concise, and straight to the point. All traders, investors, and anyone who deals with the market always wants to know which direction the market is going. So the powers that be and the algorithms and the high frequency trading programs that actually dominate within the marketplace like to do everything to confuse the masses. I have always said that legacy technical analysis, that's old-fashioned technical analysis, which is fine and good. That's like a car with a carburetor, not with a fuel injector. Still works fine, but does not really give you the predictive advantage that I like to utilize by my methods and my predictive game theory analysis, as I like to call it, and try to stay one step ahead of the game. So far, we've been pretty successful. No one can time the market on a minute-by-minute or hour-by-hour basis. However, projections that can be made over a couple of days, over weeks, over months, I think my track record proves itself that I've been very successful in doing that. Now, saying all that, intraday volatility, intraday, I would say manipulated volatility in many cases, do throw traders off kilt, and stops are triggered, and all kinds of havoc takes place. So a lot of good positions are thrown on the wayside because of the volatile nature of choppy markets, which in many cases are purely manufactured. So saying all that, what am I getting at? What I'm getting at is that this market is still on a uptrend. Charts I show in the morning, very important. The trading ranges prior to the market are important for traders to keep in mind as a proxy of what the market might be doing that day or that particular week. If you look back and check on my trading ranges over the past couple of months, you will see that I am reasonably accurate on where the market would, or what bands the market will be trading in. Of course, there are points where the markets trade completely outside their trading bands, but the eventual result is that they arrive at the destination, or the point that I kind of call. So, what do we see here in the markets right now? I've explained all the salient aspects of this particular seasonality this week. This is the 13th anniversary of the tragic September 11th event. I'm a survivor of the September 11th tragedy, so I feel very strongly about it. And I believe that this particular week, given the depth of it, is generally a upwardly biased week from what I've seen. And I have pointed that out clearly in my previous missives. Secondly, this is a week where we are also going into a very frenzied IPO period, with the largest one, which is Alibaba, coming to play, I believe, on September 18th or 19th. The roadshow is already on for the IPO. That's the marketing, circus, that the pre-IPO marketing circus, where they go and present their and try to sell the IPO to large institutional investors. In the case of Alibaba, I believe that it's going to be a pretty successful IPO. And given on the heels of that, I highly doubt that the Goldman Sachs of the world won a terrible market prior to that being launched. So saying all that, one of the other key factors I've mentioned, and I kind of have jokingly mentioned it, but I think it, and I've seen it happen, is the effect of the supermoon or the harvest moon. Read up on it. I am no astrological freak. Neither am I any conspiracy theorist that some sort of la la land type of thing where I believe that the moon cycles dominate the stock market events. However, it has been shown, and I have seen it and felt it personally as a trader, that during these supermoon cycles, markets tend to have an upward bias. So that's it. Now, saying all that, let's look at some technical levels. And I'd like to caution everyone, very importantly, which I do every day, that be flexible. There's a lot of extraneous news events that can rock the market. International events, crisis points globally, as well as the fact that stupidity coming out of Washington, D.C., policy remarks, and those type of things can rock the market. So, again, the bias still remains up. However, we are in a topping process, as I've said that clearly, and I feel that all traders should be very cognizant and aware of the surroundings. I try to, and I think I'm very successful in pointing out inflection points intraday, summarizing particular news flash headlines that come along the way, which generally might confuse traders. And I'd like to explain that in a very direct way, which can help them. And so far, I've been successful in doing that. So again, be flexible. Keep trades, within limits. Don't go hog wild on anything, and just follow, real-time live Twitter feed, the chat room, the video cast, and the whole lot. So, saying all that, this is what I see happening. I'm going to keep it very simple. With the S&P, top end of the S&P is around 2015. Bottom Bollinger in the S&P is around 1990, 1989, let's say. Below this level, let me get the drawing tool out. This can be called a extended microphone, a megaphone. I've showed that before in one of my other charts, and it was a perfect scenario. If you remember, go look at it. Just type in megaphone chart and find it on Twitter real-time feed as well as on the website. So here we have the lower level around 1990, the upper level around 2014. So what a coincidence, huh? 2014. So you got 9 and 14. So it's 1990, 10, 14, 24 S&P points. And below that, if we do break, let's say around the 1987 level or so, we have some lower numbers that come into play. So far for this week, and that's, again, I'm saying we're in a topping process, and I believe we have a quick, sharp correction as we head towards the latter part of the week, or maybe the early part of next week, once the inflow of the pension and mutual fund money, which are mandated to enter the market on the first 5 days of the month. The first 5 days of this month would be 1, 2, 3, 4. First being a holiday, it's 1, 2, 3, 4, 5. Today was the 5th day. So we're basically going to be in a little bit of a tricky, little hot water as we move forward from tomorrow onwards. Okay, just keep that in mind. We do have a very large POMO, or Federal Reserve liquidity infusion, or outright buy of treasuries and mortgage securities for around $2 billion plus, I believe. I posted that, and that's on Thursday. And this also happens to be the 9/11 solemn anniversary of the 9/11 tragedy. So I think this week, there's support under the market from that perspective. So that's it. That's S&P for you. Let me move on to a couple of other charts, and I will post some static charts on the stocks that we're trading. Without getting too elaborate, I want people to study those charts very carefully. They're very clean. They're very transparent. I make them very simple to understand. So do take the time to review them carefully and make money on them. Okay? So that's it.